Hey, welcome back to Score on Business. Make sure to check out some of the classes that we have. They're low cost, usually on Saturdays. ScoreNashville.org, and we're still with Dimeta Smith. So, Dimeta, you were talking about, or I had asked you about mistakes that small businesses commonly make. Can you, and we talked about a couple of things, can you continue there?
Yeah, so the first thing they do is operate the business as though they'll always be small. So they need to do everything that the big companies are doing. And then they also need to be proactive instead of reactive. And so sometimes that means you've got to work in the business and on the business, which is very difficult for many small businesses. They're very tied to the product. It was a dream, and so they're committed, but they don't take that other step to become a CEO of a company.
Right.
One of my favorite sayings from Stephen Covey is starting with the end in mind. And so many companies are now not passing them down to children or family members, they're selling them. So if that's your goal, the day that you start, you need to be operating as though you're going to sell that business and you want to get the highest value for it.
Right.
So you've got to be proactive.
That, I know several business brokers, and when someone's 65 and decide they want to sell the business and haven't been proactive, they pay a big price.
Absolutely, absolutely. Yeah. So it's very important. I mean, ultimately the numbers are the numbers, but I try to help them see that it's their story. And if you don't like the story, you can change it. Yeah.
Yeah, but you also need to know the story.
That's it.
Do you run into folks much that are not really understanding their costs?
Oh, that happens quite a bit, a bit. And in a product setting, it's a little bit easier because they're hard costs. They understand that if you are making a t-shirt and selling it, that you typically have to buy the shirt and pay the graphic designer. So there are some hard costs. But when it's a service, it's a lot more challenging for them to identify their cost of sales. And so their time, number one, it's very difficult for them to assign a cost to their time. But then when they hire people, it starts to come and they understand that no more can I just charge an amount that people are willing to pay because I am having to pay more costs.
Right.
And that's just the variable cost. That's not the fixed cost like your rent and insurance that you would have to pay regardless of whether you have one client or 1,000 clients. Yeah. So we definitely spend a lot of time forecasting and helping them to understand what it really costs them to make money. And there are times where we need to go back and decide if it's a non-profitable product or service, then we can also make a change. We don't have to continue down that path. Yeah,
either figure out a way for it to be profitable or you know, discontinue. How do you see folks get sideways with the IRS? If they're an existing client you've been working with, that probably doesn't happen much, but you know, when someone new comes along and there's trouble, what are the things you see?
Yeah, it usually comes with being, again, reactive. The first few years of business, you're not generating profit, so you're not prepared to pay the IRS until that third or fourth year where you generate income and it's exciting, but you haven't planned to make those estimated tax payments. So typically that's what happens, and then at that point they're playing catch up. So it becomes harder to manage that income.
Well, I'll tell you one lesson I learned that was painful. When you have to pay payroll taxes every month, the accountant said, oh, you need to pay this payroll tax. I'm like, oh, I'll pay it next month. It was a $2,000 fine.
Yes, the penalties are hefty for that. They're hefty. And in some cases, it's not monthly. So that's another challenge. You have to know what your payroll tax schedule is. Right. Some have to pay it quarterly, some pay monthly, and some pay semi-weekly. So
yeah, and having someone to keep up with that. Okay, so we may come back and talk a little bit more about that. So how do you help folks understand what it costs them to deliver their product or service, and why is that so important?
Well, we actually will look at that product or that particular service and start, of course, at the top, and we walk through and break down the details. A lot of times just spending time with them allows them to share and talk, and it's all in their head, but for us, we can then put it on paper. We can add some real hard data to what it is that they're saying. Many entrepreneurs go off of their gut, which is good. That's what allows them to take those risks. But when you're planning that business and understanding those costs, we really want to assign some numbers to it. So then we can predict what the future would be.
And so there's overhead, and there's, you know, figuring all of that out?
Yeah, we want to make sure they understand when it comes to whatever it is they're selling, that they understand the difference between their fixed costs and their variable costs.
Right.
The variable costs are the ones that you have to incur in order to sell that product.
Yeah.
So again, going back to my t-shirt example, you've got to buy t-shirts, right, in order to sell t-shirts. And so the more t-shirts you sell, the more you have to buy. But your rent and insurance, that's a fixed. You're going to pay that whether you sell one t-shirt or 1,000 t-shirts. So it's important that you understand how your business fluctuates.
So if you have a business and it gets up and running and you've got services you're offering, and let's say that you've got you've got staff that are not assigned to a project, but still you have to have them.
Yeah.
How do you figure that in the cost?
So
or the copy machine?
Yeah. So what we like to do, regardless again of what you're selling, we actually want to break out that cost of goods section on your P&L, so that you understand, again, that's what you have to spend in order to sell your products. And everything else below that would be your general and administrative expenses.
Okay.
So all of those things, that's your administrative staff, all of your equipment leases, or even your supplies, all of those things you still factor in. And in some cases you can control them, in some cases you can't. If you sign a 5-year lease for rent, you're kind of stuck for 5 years.
Yeah.
But the office supplies, if that's something that you're buying too much of, or you really don't need, you're finding waste, you can limit those.
Right.
But you want to make sure that you're reviewing that on a regular basis so that you can make those decisions pretty quickly.
Okay, that makes sense. So, I had asked this earlier, and let me ask again in case there's anything. Common ways that folks get in trouble with the IRS.
Yeah.
What about employees versus contract?
Yeah.
Do you see that much?
Quite a bit. And ultimately, I think the business owners like to choose how they want to engage people.
Yeah.
But ultimately, there are some rules that they need to follow.
Yeah.
And what they also need to know is the IRS has rules, but also each state has separate rules. So what constitutes a 1099 employee versus an actual W-2 employee, you want to make sure that you're reviewing both.
Right.
And so that becomes a challenge. People like to think I only need them part-time, or they're not using my equipment, so then I'm just going to make them a contractor. But you really have to be careful.
But the rules are different. The rules are, how much control you have over them and all that kind of stuff.
And you also need to look at industry standards, because that becomes a place where the government starts to see, well, you have a lot of independent contractors who are truck drivers, but how much control is actually exercised by those companies? So you really want to make sure that you spend time learning that, because it's a very hefty fine when you don't do those things appropriately.
Right.
Yeah.
Let's take a break. We'll be right back.
Very good.
Yeah, FedEx.